So how do we find these deals? I mean, it's more important to buy the house right than it is to get your repair estimate exactly right. By the way, I want to make a big point and then I'll come back to how do you have 82,000 in profit. By the way, the point that I want to make just left my mind. I'm sure to come back in a second. So I'll give you an example of the 82,000. Oh, I was talking about buying them right. How do you find these deals? How do you find these off-market deals? Well, since I'm in such a small market, I want to dominate this small market. In other words, I want to be a big fish in a small bowl. And so we have multiple ways that we get seller leads coming into our pipeline every day. So how do we do it? Well, by the way, all the houses we're buying are directly from owners of houses. In our area, there's nothing in the multiple listing service whatsoever. There's no inventory. Hey, look, we just put a house on the market this today, 3 weeks ago, and we put it on the market at $239,900. By Sunday afternoon, in 48 hours, we'd had 22 showings. 22 showings on that one house. And of course, we went under contract and it was all cash and we've already cashed out. But we have multiple funnels coming in. Well, what are these funnels? I want to be a big fish in a small pond. First of all, Google pay per lead. Google pay per lead. So I've got 3 different companies, not Google pay per click. Pay per click is if you're doing it yourself and you're doing your own bidding. But on pay per lead, we got 3 different companies that are providing us the leads. And those are our most qualified leads because they've gone to Google and they are searching. So Google pay per lead, direct mail campaign, we track and direct mail every foreclosure in our area. I have a full-time outbound caller, 40 hours a week, outbound calling tired landlords, tax delinquents, out-of-state absentee owners, etc. So how do you get the $82,000 profit? You got to buy it right. Well, how are you going to buy it right? You're going to find these people that are distressed, either with the property or with their own personal life situation. And so it's, first of all, very important to have the private money lined up first, ready to go before you start making offers. So buy them right, be able to find these deals, and you got to be careful on the maximum allowable offer. So here's how I make my offers. I take the after repaired value. I'm talking about on a single family house. I take the after repaired value. If it's under $300,000, I multiply it times 70%. Then I subtract the estimated repairs, and then that equals my maximum allowable offer. Now, we're only going to use that formula when we're paying all cash. And by the way, I want to make sure everybody understands when the seller requires all cash, that's when you're going to use private money. And of course, that's in the majority of the cases. So how do you make $82,000 on add your profit? Well, let me just give you an example. Right now at 1903 Arundel Street, we are almost finished with the renovation. By the way, you're not using private money just for renovation houses. It's when the seller requires all the cash, even if there are no renovations. So this house at 1903 Arundel Street, we just closed on it a few weeks ago, started the rehab immediately afterwards. And here are the numbers. The after repaired value is $550,000, and I think that's conservative. I think it's going to be more like $575,000. And by the way, we live here in an area that's near the water or on the water. So that's why we have, a median price range, not even on the water, of like $350 now. So the after repaired value is $550,000 on this house. The rehab is approximately $60,000. And then guess what I bought it for? $325. So if you take $325 and you add the rehab to it, then that is what, 60, 385, rounding on up to, to 400. Well, 400 to 550, that's 150, but realtor fees, I paid 5%. That's going to be about $27,000 coming off of that. So you can see this is an example of what we're doing right now that's well exceeding $82,000. So the short answer is, how do you make that? You got to have the private money ready to go so you're able to negotiate. Here's one way we got our offer accepted by using private money. We told the seller that, and the seller didn't have anywhere to go. We told the seller, tell me how much longer you need to stay in the house, and I'll go ahead and close right now, 7 days from now, all cash. You can get half of your money now at closing, and you can get the other half when you have vacated the property. And so she took the offer. So if I hadn't had the money ready to go, I could have missed out on it. And what sealed the deal is being able to close right now. Let me tell you something. Here's a writer downer, folks. Time kills deals. The more time that goes by between you talking with someone you're going to do business with and actually closing the deal, the less likely you're going to be doing business.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.